Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, a lot of weakness earlier, and we were telling clients at the desk, it starts to feel like there's a little bit of panic. And then all of a sudden, you get a tweet or comment from President Trump that him and President Xi are coming to an understanding. They're reopening talks, and there is an alternative to a Chinese-U.S. trade deal. So a lot in development right now, but the S&P is ripped a good 1% at least off of that low, 28.36. What's most crucial is that close. Now, we're looking at big support, our major three-star level. 28.62, 28.66. Yeah, and it's shredded through that. And there's definitely some support levels we have below there, but that's going to be crucial on a closing basis. Watch that, and that also aligns near the 50-day moving average too, so it also becomes important. Now, in the NASDAQ, you're getting this nice recovery, about 100 points off the low. So, watch all this, and about 76.30 there. So we're running into some resistance on this recovery, but it matters where it closes. And obviously, it's going to be headline driven too. We were upbeat on the Morning Express talking about tomorrow and how crucial it is, comparing it to late June and early July. Take a look at the Morning Express. Lay out some groundwork, really emphasizes how important CPI is tomorrow, and ultimately, if at worst case scenario, a watered down version of these initial threats we heard Sunday night from President Trump. It could really bring a massive tailwind to finish the week out, with equity markets and risk sentiment moving higher. That would affect crude oil, which is stalling again below our resistance, 62.55. However, it's been constructive of above the 200-day moving average, which is most important. Watch it settle around 61.45 area. Above there is still very favorable. We again went slightly bullish on crude oil as well as in the equity markets, because we think there is a high probability at these levels, going back to the first comment I made, that they're starting to get a little panic here. At these levels, there's great value, and if we see that tailwind, you can start to get a lot of panic or FOMO into the market. And then lastly, one disappointing factor out there is gold. Of course, the Chinese yuan has held it back. There's definitely, traders, investors in gold are certainly snake bitten from last year, when the market just fell precipitously down through June and July and August with that weakening Chinese yuan. And if there's going to be a trade deal, or if the trade deal is going to fall apart, the Chinese yuan will weaken, and that would drag gold with it. So no one's really dying to jump into gold and really press that higher. There's also tremendous overhead resistance, 1291 to 1296, and that aligns with a trend line from the highs in February. It needs to get out above there. What can be the catalyst? Well, a weaker CPI, of course, and a strengthening Chinese yuan. All could come with a good comment by President Trump tomorrow and a miss on that CPI tomorrow. Give us a call. We're here to help with anything on the board, and there is going to be a big finish to the week, we think. So 312-278-0500. You can email us info at bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.